Okay, folks, a major signal for Bitcoin and stock markets are about to trigger. It's on the cusp of triggering, and most people don't even know about this. Most commentators are not even talking about it. I'm going to show you today what this signal is. Let me just give you an early taste of what this thing looks like. Look at this. So basically, whenever it pops up above zero, Bitcoin tops. That was a Bitcoin top in 2017. Whenever it pops up, Bitcoin tops. That was the top in 2021 at 64K, and then topped again at 69K, right? And when it goes down, Bitcoin has these. When it goes down, Bitcoin has these massive big runs. Which amazing indicator is this? And also, look, the markets right now. People are asking if this is a dead cat bounce or if this is for real. Okay, so I'm going to answer both questions today. Right now, for example. This is a stock market led bounce. We're seeing SP 500 and NASDAQ and QQQ all break through their major resistance levels like here. Is this real? I think this is what's called an ABC wave correctional pattern, right? What does that mean for people who are not into Elliott wave theory? Okay, before we go on to answer those very important questions, the big signal for stock markets and crypto, and if this bounce is real or not. First, let's answer the question of which crypto exchange does Pablo use? Well, Pablo uses this exchange that is non-KYC, which basically means that you don't need to show your ID. And I've liked them so much, I made this deal with them. So there's all these great prizes to be won, including this BMW 1250 motorcycle, plus all these great prizes. Look at this, Rolex, ticket to Dubai, MacBook Pro, all these great prizes just by joining and trading. So, as I said, no KYC means you don't need to show your ID. That means Americans can use it. That means basically the CIA can't even see that it's you. IRS can't see you. Tax office can't see you. FBI, nobody can see you. In fact, the exchanges themselves can't even see you. This link, right? This deal is only available on the Pablo deal, and the link is in the description below. If you are on YouTube, the link is in the description below. But if you're on some other platform such as this one, then basically just click on my profile page, and it's basically the first thing that pops up on the Stan link, right? So we click on the Stan link on my profile page, and the Stan link right there, and it's basically the first thing that pops up. Okay, guys, let's get straight back to it, but just keep in mind, only on the Pablo link, okay, for a limited time only for the next 2 weeks. What I mean by an ABC correctional wave. Now, this is very simple for folks who are into Elliott wave theory. Basically means that when you have a long uptrending market and then you have a pullback, right, it fakes you out with 3 waves, A, B, and a C, right? Doesn't always happen, but tends to happen more often than not. And I think that's probably what we're experiencing right now. So remember, A is first leg down, B is the bounce, and C is the next leg down. Well, let's apply this to Bitcoin and the stock market and see where we get. For stocks, for example, so I'm thinking this is A wave down, B wave up, probably get rejected something like 584 on the Spider ETF, SP 500 ETF. And then we go down one more leg. May not go to 524, which is where I see the support is for SPY. May not go down there. Might just take out the low, something like this, and bounce. So for QQQ, for example, something like A, B, right? The resistance would be around 502, 503 area, and C, something like this. The support would be around 448, 449, but then once again, we don't need to go down that low. We can probably make it double bottom or slightly just take out that old bottom and bounce. So overall, I'm still bullish for the next few months, but for the next 2 weeks or so, I think we bounce and get rejected into an A, B, C wave. That's for the short term, so next 2 weeks, maybe even 4 weeks. But then coming up for the next, say, 2 or 4 month or 6 month, I think we get into what I call a big bounce or even a blow off top. So we bottom sometime in the next 2 to 4 weeks, then a big bounce, We could even make a new all-time high and can be a blow-off top. Now, let's get back to the big indicator I was talking about at the start of this video. What is it? Okay, here we go. Have a look. So this is the, if I make the screen small, chart smaller, you might see it. This is Bitcoin and oil, right? Percent difference. And what happens is basically that Bitcoin is actually highly related to the price of oil. And you might think that's weird, but it's actually the entire stock market, the entire bond market, the entire US manufacturing, they're all related to the oil because it's so simple. This is the oil percent difference between its price and 200-day moving average. So if oil is rising a lot compared to the 200-day moving average, then Bitcoin tops. See, it's been falling, right? The black line is Bitcoin, and when it gets into a rising territory compared to its 200-day moving average, then Bitcoin tops. When it's falling, right, Bitcoin takes off. And then when it tops, like when it starts rising against 200-day moving average, Bitcoin tops at 64K. And then goes up again, and Bitcoin tops again at 69K. Right? I'm going to show you guys a few more charts, right, so you guys believe in this theory. But this is such a fundamental and basic theory for folks who still don't understand what's going on. Basically, do we agree that Bitcoin is all about the Federal Reserve and QE, quantitative easing, and printing US dollars? When the Fed does this, we know Bitcoin goes up, we know Ethereum goes up, we know all the altcoins goes up, we know the Solana memes go up, we know even the stock markets go up. It's all about liquidity. And when does the Fed get easy in terms of very dovish in terms of printing? The Fed prints when inflation is falling. It's all about inflation. What's the two key measures of inflation? You could say it's oil prices and shelter meaning house prices and especially rent. I think it's mostly rent. So basically, if you can, rent doesn't do this, right? In some places it's illegal if you hike prices, rent prices by like 30% or 40% or whatever. But for oil, it can do this. It can go down 30% in like 6 weeks. So let's have a look at another chart, right? If oil tanks, sometimes it's a very good signal, and it shows that the Federal Reserve could get very easy about inflation. Okay, let's have a look another chart to put you at ease, because I know a lot of people are doubting me right now. This is Bitcoin and oil, right? And we're now highlighting the places where when oil is going down compared to its 200-day average. Then Bitcoin takes off, right? This was the 2017 bull run. It topped. Oil price goes up, Bitcoin goes into bear market, right? Oil crashes, Bitcoin goes into bull market, right? Okay, and this is where oil crashes again, 2019, 2020, 2021, Bitcoin goes into massive bull market. Oil starts rising, inflation starts rising, Bitcoin goes into bear market, right? So basically, now this part is the only time where, well, you could also say that we've had some ups, some downs, some ups, some downs, some ups, some downs. So this period for the last 2 years is essentially when we've seen oil prices kind of oscillate up and down, right? It hasn't, unlike these periods where it's only down or only up, this is sideways action, and that's why Bitcoin can still go up. But just remember, the last 2 years, altcoins have gotten hammered, right? So that's how difficult it is for altcoins when oil prices do this, when it's not in a downtrend. One more chart I'll show you guys to prove my theory is, if you still don't believe me, have a look at this. So this is all the way from 1970s. These gray bars are recessions. Whenever we see a gray bar, that's a recession. That's the COVID 2022 recession. That's the 2008, 2009 GFC, for example. And then you see this is oil price, right? This purple line is oil price. And these parts, these highlighted purple lines, right, is when oil prices are going on a major run. And we can see that all the way from down here, right, in the 1970s, when oil spikes, US economy goes into recession. Oil spikes, US economy goes into recession. Oil spikes, US economy goes into recession. That should be pretty obvious by now. And that was 1970s, late 1970s, 1980, early 1990, 1999. You know, dot-com bubble, in fact, got pierced. The bubble burst due to another massive rise in oil price. And now we also see this as well. 2009, right? Every one of these, without a doubt, and except the 2020, which was COVID recession. Well, that was obviously due to COVID. The reason is so obvious is because the Federal Reserve just cannot cut rates when inflation is still going up. They can cut rates a lot easier, and they can do QE, which is printing, when rates are falling, and or when inflation is falling. And inflation, probably the most key factor to inflation, is oil prices, and that's why the US basically does so much activity in the Middle East. They want to control oil. Like we hear so many stories about Iraq. It's not about democracy. It's about the oil, man. It's about petrol. We've heard that 1,000 times. So basically, that's why now this is why it's so important. And this is the Baker Hughes oil rig count in the US. So if we want oil prices to go down, as we've just seen that chart, basically we need more oil supply. And then we need what Trump calls drill, baby, drill, right? We need these guys to start drilling. And this blue line, dark blue line, is basically the number of oil rigs that are in the US. When supply comes up, oil prices tend to go down. When we need supply to come up for oil, if I'm not saying politically why we want oil rigs to come up, but that's what would be good for Bitcoin and stock market. So we need this line to go up. But we can see in the last 3 years, since Biden's come to power, it has kind of fallen flat. So Trump now really needs to lift it. So far, we're not seeing a lot of rises in this oil rig count. And it's actually not Trump's fault, because he made a big election promise, which he can't really keep. He said, drill, baby, drill. But it's not up to him. Basically, if oil prices go up, then there's a lot of incentives for oil companies to drill, then they will drill. If oil prices are down, then they won't drill. It's as simple as that. So, and this is the reason why they're not drilling. Okay, let's have a quick look on the chart. So this is oil price basically, and that's the reason why I wanted to show you guys, because see right here, we are kind of pretty much on the cusp right now of a major. Look at this, where price is right now. $67 is basically kind of like the bull-bear divide, right? It's oil's in a bull market when it's above this $67 area. When it gets rejected around this high 60s area, it goes into a bear market, right? So we're now almost at the point where oil prices could do this, could take a fall, right? And if that happened, that could be really good for in terms of the Fed cutting rates, doing QE, ending QT, and also that could be quite good for stocks and crypto, except I say in the instance where the economy crashes. What people might sometimes say is that, oh well, Pablo, you're only looking at this through one lens, and that is, if oil prices crash, why is it crashing? Then it means there's a recession. It means no one is using much oil. There's not much transportation. There's not much industrial production. And what I would say to those guys is, sometimes you're right, but sometimes you're wrong. Look at this. Look at this period. Oil prices, this is 2014, fell below this key support line of 67K area, which is where we're at right now. And boom, it went below 67K for almost 5 years. And during that 5-year period, you know what happened to the markets? Well, let's have a look. During those 5 years, this purple line is the SP 500, right? Or Spider ETF. And from here onwards, after 2014, after oil prices dropped below, then basically the stock market went on a major run, and this ended in 2020 because of 2020 because of the COVID crash. So we can see that these a drop in oil prices is quite positive for the stock market, for inflation, for the Fed to cut rates, to go into dovish mode, for crypto, for everything, especially for altcoins. We hope the drop below 67K, which could be easily be coming because we're sitting right on that edge now, is because of a falling inflation, because of a natural falling in oil prices, because of rig counts going up, because Trump is doing drill baby drill, and not because US and world economic activity is going down. So that's another very important signal to watch out for. And so that is why I am not bearish for now. I think very short term, next 2 to 4 weeks, we could get one more leg down, A, B, C wave down. Could even be a double bottom. But next 2 to 4 month, I'm thinking we bounce, we bottom and bounce, which would be a big bounce at least, or even take out the old all-time high and make it a new all-time high, a blow off top, as I've been saying. Okay, for all the Aussies watching, Pablo uses SwiftX exchange. I find it to be a nice on-ramp and off-ramp. The link is in the description below. For everyone else, thank you for tuning in. I'll catch you later, guys.